Let's drill down a little bit more on China now, because in the last few weeks, as we heard earlier in the show, speculation in trading of all sorts of things Chinese has reached frenzied levels. I'm joined now by fund manager Roger Montgomery. Roger, welcome.
Thanks, Ticky.
And we first pricked our ears up on this with the trading in rebars, you know, these steel bars that go into reinforced concrete. Yes,
indeed.
And cement in buildings.
Yeah.
How much broader is it, though?
Well, it reached everything, and on April 22nd, when record futures volumes were traded, it was everything from bitumen to eggs to glass and even cotton. In fact, I think 80 million contracts traded that day, and it was the equivalent of $261 billion of contract value, which was more than all the tech stocks on the NASDAQ at the peak of the internet bubble in 2000. It was more than all the equities traded at the peak of the equity boom in China. And I think someone said there was more cotton traded that day, or enough cotton traded that day to make a pair of jeans for every human on the planet, and enough soybeans traded that day to serve 56 billion serves of tofu.
Now, who is trading here? Because we're talking about the futures market, aren't we?
So now remember what's happened. In Australia, Fortescue rallied from $1.85 to $3.60. We've had mining companies all around the world double and triple in price on the belief that the futures trading and the commodity price increases we were seeing in China was reflective of the fact that China was recovering. Now let's drill down, as you said in your introduction. 40% of all the volume traded was in the night market.
Yes.
Now, who's trading the night market? Individual punters who don't want to lose their job during the day if they're gambling on futures.
Punters in Australia, they wouldn't know how to invest in the futures market.
Well, it only takes 40 minutes to open a futures account in China.
And I gather these trades, they were buying and selling, literally, some holding for just 40 minutes or 3 hours.
So the average holding period for a futures contract in China was 3 hours.
Wow.
And the average on the CME, the Chicago Mercantile Exchange, is about 40 hours. Yeah. So this is very short-term trading going on that was driving the commodity prices higher. If you look at the copper price, which is often used as a proxy for global growth, the copper price rose about 10%, and it's still in a downtrend, arguably.
Now we all remember the stock market bubble and burst in China last year. Is it the same as that, or is it different?
Well, what we're seeing, I think, a microcosm of the picture for the world, or a mirror of what's happening in the world. So we've had increased liquidity. Curbs were put on property trading. Curbs were then put on stock market trading. The amount of money you can take out of China has been now limited, but there were no curbs put on futures trading. So as a result, that was where we saw a concentration of speculative fervour. But when asset prices increase and they're supported by liquidity but not supported by fundamental growth drivers, then they mean revert, they come back. And that's what we're going to see in the property market here in Australia. We'll probably see it over the next 3 years in the stock market as well.
Now, the regulators in China have put the brakes on a little bit already in this trading, but also in Australia we've had some response from our banks.
Indeed. So we've seen Westpac and the ANZ say that they have stopped lending to foreign income generated borrowings. They've also just disclosed yesterday or today that they've been duped, and a lot of the declared income is in fact not real. They're falsified accounts. So we're going to see that not only will we see less foreign buying of property in Australia and less of it funded by borrowings, but we'll also see that, as ASIC did last year, cracking down on poor lending practices, that'll need to be tightened up as well. I really do believe that in Australia we're going to see property developers unable to sell all of the supply that's coming out of the ground now over the next 18 months, and they'll be forced to discount what inventory they can't move, or the banks will take possession and discount it for them.
And what does that mean for our property market, very briefly?
Well, that means apartment prices will come down. Now, a lot of people tell me, and this is a big mistake, a lot of people say to me that will be confined to apartments. Let's make no mistake, property is priced relatively. If someone sees that a 3-bedroom apartment is cheaper, they're not going to the auction for a 3-bedroom house.
Roger Montgomery will follow it closely. Thank you very much.
Pleasure, Ticky.